Welcome to the Rutherford Report. I'm Nick, and this is what the market is telling me this week. So, I wanted to start doing videos just talking about my investment process and what the market is telling me relating to that investment process. And the reason for this is it's going to help me and it's going to help you. So I'm going to start off just doing this and doing a terrible job at it and getting better at it. But the first thing I want to preface here is that I really like to watch the market and figure out what the market is telling me and use it as signals to confirm or disprove some of my investment theories. Because I never want to be smarter than the market. Once I start thinking that I'm smarter than the market, that's when I'm going to lose money. So the first thing I want to look at this week is the S&P 500 is still chugging along. It's at 5,200, closing out the week. And give or take, we're not going to be exact here. I just want to get the ball rolling on my market updates. So there's not a lot of excitement going on there, but it is telling me that the trend is still going up. So let's look at Bitcoin next, because a lot of people like Bitcoin. So Bitcoin, it's just kind of been consolidating sideways. The halving event is coming up, and part of my investment process is to study history so that I can predict what will happen in the future based on things that will have happened in the past. And now, of course, they don't always work out the same way, but the Bitcoin halving is coming up soon. So this most likely is a consolidation with another leg higher, unless, of course, the economy falls apart. And we'll get to the danger signs that I see in the market coming up. But will it happen? Who knows? But if history is any guide, it may happen, and that's going to come up soon. So that's interesting. Now, what's most interesting this past week is the move that gold's been making. Now, it's quietly been making this move because I've talked to people who are obsessed with gold, and they're not even excited by it, which that makes me incredibly excited. Because if you look at gold, it has definitively broken out. We're at all-time highs. There's not some sort of crazy event. Now, of course, maybe on Monday we're at war and there's some sort of crazy event. But I've listened to a lot of smart people, and they seem to think that gold is a great predictor. Like in 2020, it predicted the inflation that we would later have. But another part of my investment process is looking at trends. And there's a trend of the U.S. government debasing the currency, which should be good for gold. There's a trend of when the government seized the Russian assets, or whatever words you want to use to that, when they froze their treasuries because of the war. That was a big signal that, for me, points to the fact that eventually gold will go higher because less people will want to use the dollar, because if you get on the wrong side of the government, they're going to freeze the assets and you won't be able to use it. So this was a potential big investment trend that I see. And this isn't me saying go out and run and buy gold or anything like that. But what I like to do is come up with ideas. And part of my process is to come up with ideas around trends. And if you can be early in a trend and then continue to watch the market to signal, is this trend improving? Is it not improving? Then that really can set you up to buy low and sell high if you do everything right. And what's most interesting is really this giant up leg in gold, especially when the miners are at somewhat really, really low prices compared to gold. Just go check out some of your favorite gold miners, compare them to how they were in 2020 to now, and they're extremely, extremely low. Another thing that I'm watching in the market this week is just another thing that came up to confirm this trend for me. And as a disclaimer, I've got a lot of gold, not in my basement or anything. I'm invested in the Sprott Physical Trust because it can hold gold on the stock exchange. Well, it doesn't hold it on the stock exchange. It holds it in the Royal Canadian Mint, but then I can trade it on the stock exchange. So here's another confirming signal that I saw this week, and I just wanted to point out because I think a lot of these little things, they all add up to something. And here, Utah formally empowers a state treasurer to protect the state funds with gold and silver. So this was an article that came out this week that I think is another small article that, again, is telling us something. It's telling me, I shouldn't say it's telling you because I can't make any claims here, but what it's telling me is this is another signal that the trend is intact, because here's the state worrying about the purchasing power, so making moves to be able to use gold. Now, let's move on to something else that happened this week. Now, this is a huge thing, again, because part of my process is always to use data of what the market is telling me so that I can know what happens next. And if you think about it really simply, employment is a huge signal, because when people start losing their jobs, at least in the past, using history as a guide, once they start losing them at a faster rate, the economy slows down and can head to a recession. And when you're in a recession, this is when you start to lose money in your investments. So the good news is employment on Friday came out at 3.8%. This is fantastic news. And why it's fantastic news for me is that I check different signals in the economy to guesstimate when we might have a recession. And by that, what I mean is I use a back test to figure out, all right, are these conditions in place where historically a crash has happened? And at 3.8%, that's fantastic news because I'm not hitting any sort of threshold. So the market is telling me we're all good. However, there's a really interesting stat here. Now, this is another chart that I got from Zero Hedge that I just wanted to point out. It's very interesting because I know that I've been sitting there thinking, all right, the market's saying great things, but inflation is super high. I'm not really sure how the economy is going. Some of the economy looks really good, but other parts of the economy look really bad. And here might be an explanation of why that's happening. So this is a chart that I pulled off Zero Hedge this week. And if you look at the labor supply and demand, there's a huge change from what has happened historically. If you look at the recessions in the 80s, the 90s, in the 2000s, like the dot-com crash and the 2008 Great Depression, the labor demand was much lower than the labor supply. But recently, this has inverted. And this might be telling me something, or telling us something, about why, even though the Fed has raised all the interest rates, why the economy has been so strong. This can point to one of the reasons. Another reason that's been floating around and that I've been looking at is all of the stimulus from the pandemic that went out there is still sloshing around. So there's a theory that all of that money is propping up the economy, and people who look into these things and calculate these things, they believe that. So what I'm doing is just trying to use signals from the market here to determine something. And what I'm determining right now is that I should be long. And this is not to say that you should be long. I'm just saying what I'm watching and what I'm doing. And this is a very interesting statistic because what it's telling me is right now, today, there's a lot of labor demand and not enough labor supply, which means the economy is going to chug on forward. Now, I reserve the right to change my mind tomorrow on Monday, so don't be trading off of anything that I'm saying, but this is just a very interesting chart that gives us an explanation of what could be happening. Now, there's another interesting chart that I found on Zero Hedge this week that gives us an even more striking piece of data here. So if you look at the job growth here of just native-born workers versus foreign-born workers, you can see that there hasn't been a lot of job growth from native workers, but a lot of foreign job born workers, the growth has exploded post the pandemic. Now, I don't know if they're pushing an agenda here, but this is something to keep in mind. And another thing to keep in mind is these are probably lower skilled jobs. Just if you look at the news and all the migrants and those sort of things, it's hard to say. We're not going to know for 100% sure, but it's something to keep an eye on that I'm keeping an eye on, just like to kind of explain all of this craziness. Because usually when the Fed hikes the rates, chaos ensues and we tip into a recession. So if jobs are really growing here, this could be a reason why we've been staving off the recession. And these are just the things that I'm looking at this week because Employment, though it could be a lagging indicator, it's one of the most important indicators that I use to look at to figure out, all right, are we setting up for a big problem or not? And so far, as of this time right now, I don't see a problem immediately. But what happens next? So let's talk about what happens next. Now, of course, the real answer to that is I have no idea. I don't know. But there's some interesting things that I'm watching. So here's another article that came out this week that I'm paying close attention to. So we all know the Fed is talking about, all right, this week, not this week, I'm sorry, eventually we're going to cut rates, they're saying. So a few different things could happen in my view. And the first thing I want to look at is this chart here. See, they're talking about cutting rates, but of course, we could have a repeat of the 70s and inflation could come back. And then we're going to be in for a big problem. And if you look at this chart that came out, this is a chart, again, I'm getting off Zero Hedge, but we're talking about the rent because this is a big cost increase for everyone. Or not for everyone, but I'm talking about as part of the CPI, because everyone is worried about inflation coming back. And if inflation comes back, that's going to determine if bad things happen. If it doesn't come back, it's going to determine if good things are happening. But that's why I'm keeping a close eye on it. And if you look at it, the home prices, the owner's equivalent rent, whatever word you want to use for it, and the reason I talk this way specifically is the stats are so muddied, it's so distorted that you kind of have to... It's almost like I'm peering through the fog to try to guesstimate what could happen next. And then I wait for it to become very obvious in the market signals, and then I make my move. So if you look at it, we have just a big deviation from normal again. The last time we had this kind of deviation was when we had the financial crisis of 2008. So we could be setting ourselves up for a big problem. And let's talk about the different implications of this really quickly with just things that have come up this week that I think are important. And then we'll try to wrap up this video because I'm trying to get in all the news that I think is important, but not make this crazy because I know you don't have all week to look at it. But I'm looking at it, so I want to point out some important things. So part of the economy is going really good, and of course asset prices are going up. But on the flip side, part of the economy is going really bad, and that makes me really nervous. So here's another stat that came out. Here's an article on Zero Hedge. I like to use Zero Hedge because they kind of get different... they'll put out stories from all sorts of news sources. So you get the good, the bad, and the ugly, and it's not just necessarily one side. Now, hundreds of 99-cent stores are liquidated. So what is this telling us? This is telling us that part of the economy is doing really bad. If the dollar store is going broke, that's a big problem. So on one side, you got everyone saying the economy's good, and on the other side, there are these signals of the economy being really bad. So I think that two different things can happen in the future, and it's important to keep an eye on that. So one of the best charts to look at here is this chart from Goldman Sachs Global Investment Research. So let me see if I can make this bigger for us. So let me make this really big for us really quick. And that's almost too big because my face is in there. So I don't know if you can see this exactly, but this is just supposedly some sort of things that have happened in the past. Because right now, the Fed, in my view, is what's going to make all the difference. Are they raising rates or are they cutting rates? So what happens in those scenarios? So if you look at this chart, if they start cutting, they decide that inflation is vanquished or that we're going to cut so that we can have a good economy during a presidential election cycle, because maybe they're going to do that, maybe they're not. They want the economy good. If you look at the top two lines, that's what historically, allegedly, has happened when they cut rates and there is no recession. So right now what we talked about, the jobs market is telling us, oh, everything's rosy, but if you look under the hood, it's a little concerning. If you look at the move from gold, it's a little concerning. If you look at how equities have been doing just in general, no, everything's fine. So we just want to keep all of the possibilities in mind and be flexible so that you don't get locked into one sort of way, because I want to be flexible to make moves when I need to make moves. So here we have just different scenarios that could play out. And if you look at the red line here, that's what usually happens if they start cutting. And, well, that's a full sample. So that kind of includes COVID when they did lots of stimulus. So if they did lots of stimulus and they cut, well, it's going to be bad, but not so bad. If they cut because the economy is doing bad and they can't do lots of stimulus, let's say because inflation is ripping and they've realized that they caused some of the inflation, or who knows for what reason. But then things are going to be a lot worse, and that's this lower line here, this bluish line. And that's one possible outcome because, oh, everyone wants Fed cuts, but Fed cuts sometimes mean the economy's doing bad and then everything's going to go down. So, is gold telling us something for a reason? Well, gold usually sells off when things do badly too, so it's really hard to say. But these are the things that I'm watching so that I can know when to make a move. And, of course, if they cut and things go well, it's going, if history is any guide, it will maybe look like this. We'll just have to see. And that's why I'm watching. Tune in next week for what the market is telling me. For right now, the market is telling me I don't have to do anything because I'm long and the signals so far are looking good, but I'm remaining flexible and terrified that things will go bad in any second, so I'm watching the signals. So subscribe and stay tuned for next week as I get better at this and I just give you the updates of what the market is telling me and how I'm thinking about it and what I'm doing.